Good morning. This is Bill Riley with Riley Private Client, and we're going to revisit the markets and see where we are, kind of give an update. And we're in the middle of earnings season, which is always interesting. And I'll kind of give you some insights as a professional money manager about why markets tend to drift downwards once you get a good earnings report. The name of this session I'm going to call it the most annoying bull market of all time. It's remarkable to me that the market has moved up so fast since the bottom of the pandemic, and people are still somewhat concerned. There's still a lot of money on the sidelines, and they're still nervous about what could happen. And that is normal because we went through a very trying time last year, and it takes a while for those wounds to heal. And so that's about where we are. Here's an interesting fact. 1 year ago today, oil, now this is on the futures contract, not the real oil, hit minus $37 a barrel. That threw us off for a shock. Now remember, there's a difference between real oil and futures contracts. That's the commodity price. And I had people calling that said, hey, I've got a swimming pool. Can I get somebody to pay me $37 a barrel to fill my swimming pool with oil? Well, that was not realistic. And I think that's one of the reasons we're having trouble, everybody accepting the fact that we are back in some sort of a pretty good economic time here, and things are turning around, and people are going back to work, and things are getting better, and profits look good. Now here's one of the reasons why some stocks will drift downwards once they get a good earnings report. There's an old adage, been around for a long time, called buy on the rumor, sell on the news. And that's just part of the process of managing a portfolio. Once we get earnings reports, like we did on a couple of the big cap stocks last night on the Dow, it's not unusual for us professional money managers to take a look at it and say, well, we're a little bit overweighted there, so let's take some off the table. We know where we are and we know where we're going. So that's why you see that. Now that usually stops, and then people start buying back in, or they raise cash, or they'll buy something else. So don't get confused just because you have a good earnings report and the stock will drift down some. Now, if it's a bad earnings report, they can drift down a lot. So you need to pay attention to that one big time. So I'll kind of finish this up and kind of tell you where we are. I think we're in some sort of a pretty powerful bull market here. I can't find anything that would really stop this train, except for politics. But I think a lot of that they're talking about and, rattling their sabers isn't going to get done very quickly. And the markets will continue on an upward track here, especially if we keep getting these earnings reports that we're getting and the types of things. Now, will things change? The environment will change? Sure it will. If you're in the stay-at-home stocks, those will start getting sold off. And the money will then move to the infrastructure, the reopening stocks, and those types of things. So yes, this is the most hated bull market of all time because no one wants to really accept it. And there's still about $5.2 trillion sitting in cash and short-term bonds out there that hasn't been allocated to the market yet. But it will come. And I think we're going to have a pretty good summer here and fall, and maybe into next year. My thoughts are, and listening to some of the heavy hitters out there, we've probably got about 18 months of this that you could really have an opportunity to repair your portfolios if they already haven't, and to take advantage of some pretty good upside. So I'll leave it with that. Sometimes the wall of worry, we call it, helps in a bull market because everybody's still worried. So let's just see where we go from here. And I'll probably be talking to you first part of next week, and we'll see where we go. Well, thank you very much for your time. Bill Riley, Riley Private Client.